Hey, what is up, everybody? This is Evan Carthy from evancarthy.com. Today, we are going to look at the weekly preview for the week of March 8th, 2020, and we'll also go over what happened last week for the markets, specifically the S&P 500. So, as probably everyone's aware, the coronavirus has been causing the markets to do huge, wild swings. Great for day trading, been some crazy action. The market is definitely in the middle of some type of correction right now. Let's go out to the continuous contract right here. I'll show you what it looks like. Here we are down here. It hit the lows down when we had like around October 2019 and went down there and hit, and has bounced off since then. Now we still have this big gap up here from about 33.13 to about 33.28 around there. So I do expect that eventually to come back and get filled. If we are done with the downside, we shall see. But let me just show you this thing here real quick. This is what I used to trade off right here. I'm looking at. I will go over the trades here in a little bit, but so far right now, this has at least hit the 50% level. So this is valid for a continuation move down here. If it does happen down at about 2706, so it definitely could happen, and not saying it is going to happen, but it is a valid trade setup that could be going on right here. So if it breaks its lows right here at around 2854, then look for 2706 to be the next target. It could definitely, of course, go lower than that, but look for some type of support down there. If price does continue to go down, that would be my next target area on the daily time frame that I would be looking for. But this does propose an interesting target up here, because if this low holds right here at about 28.54 and price continues to go up, it could easily come here and fill that gap and then starting to turn lower again. But that's where we currently are for it. As you can see down here at the lows about December 2018, we're still quite a ways away from them. So this decline in the market right here, I wouldn't worry too much about it. These things happen. It's due to happen. I mean, look around here, this was around election time right here. Look how much we've gone up since then. It was around 2123 when we went the higher of about 3400. So having a little bit of a pullback, no big deal. Economically, the fundamentals, especially over here in the US, really haven't changed. The coronavirus is going to slow a lot of stuff down for the near term, but 6 months from now, assuming the summer does kill off a lot of the virus, it slows down and hasn't crippled the world economy like it currently is doing, we should be back up and running. But let's go ahead and look at the shorter term time frames here so we can go over what to look for. So as you can see, pretty much most last week, starting on the 4th right there, we had a nice little double top between the 3rd and the 4th of March. Continue to go all the way down. I'll explain what these boxes are here in just a second. This blue box right here, and this is using the hourly chart for it. This blue box down here is a buy zone support box for it. If we take this swing low, that swing high, you can see price bounce perfectly in it between about 29.14 and 28.85. What the levels are, it's the 78.6 Fibonacci retracement level, and then the 88.6, which both the 78.6 is just the square root of the 61.8. Then the 88.6 is the square root of the 78.6. So that's what I look at for getting into the trades, because we've seen extremely deep retracement levels on these setups that are looking to move. So if this does hold and this is a support area for it, then the exit level we're looking at up here would be about 32.13, around there for it, assuming that holds. But it's just interesting, very late Friday when it came back down, it got extreme support right off there and rocked it up. And also the reason why is, let me delete this real quick, is we had a buy zone, or excuse me, it completed another setup. So on the 1 hour chart, so if we use this swing high, this swing low right here, you can see price came up here to the resistance area between the 78.6 and 88.6, came back up, hit it, and then went all the way back down. This yellow box right here, that's the money box right there. It just signifies it's the money box on the 1 hour chart. If it's more of just a gray box, that just means it's either the 1 minute, 5 minute, or 15-minute box. So we have the blue box with the purple shade signifies 1 hour support. We have the yellow box with the purple shade signifying the 1 hour money box, that's for the target level we're looking at reach. So we had a perfect storm. They both came down to here and hit the money box, hit the support level, and as you can see, it's provided very good support for it for the time being. So if that is going to be the support level and is going to move back up, then for the longer term, we're looking at least around 3180 to be the target level from that move, if that is it from just a second ago. So we will go down into the 1 minute chart right here and zoom this in here real quick. So what we had over here going into it, here was Friday's trade setups, and then here was a couple from the day before. As you see, we had a couple expanding triangle setups right here, and what the expanding triangles help us do is it helps us wait for the retracement, so we're not getting rocked in and out as quickly as before, because you can see you come down here, you have that low, comes to make the high, lower low, there's 0.3 right there, so you got 1, 2, 3. So now you're looking for a higher high for 0.4. So there you go, there's 0.4. Now normally if you're looking to trade this right here, this is when you're going to start getting stopped out, because it comes down here, fakes out like it's going to make the 0.5 to complete it, it doesn't, goes back up, creates another high, fakes it out again, and goes back up and creates another high right there. So really all it was doing right here was making a short term kind of ABCD-ish pattern with a little bit different. It's obviously not true ABCD pattern because it's going deeper than the 50 to 61.8%. It's going all the way down to the 78.6 to almost 88.6 level. So you're getting extremely deep retracements before it comes up and completes these patterns up here. So you have that one right there, and then you have this one right here, came down, hit the 61.8, and then came back up perfectly and hit it. So what I was looking for, because these are trade steps that I did take, I believe it was on the Russell though, and I was taking it, is I always go, so is you have 0.1, 2, 3. So at minimum, price has to break this level for me to look at this trade. But I usually look at going a little bit higher than just the last swing high, just because this market has just been so crazy for it right there. So even if you had taken kind of that swing high for it right there, you can see price hits between the 78.6 and 88.6. Came down, would have given you some good profit. Definitely, I wouldn't have taken, or you wouldn't, anyone shouldn't have taken a loss if it comes down all the way that and it comes back up, because my stop is just above the 100% level right there. So that came out, didn't work. So what I'm usually looking for in these markets is the highest will go is from 2 swing highs ago. So as you can see, that one I wouldn't be able to get in, even though it hit the 61.8. So what I usually look for is to come down to the next like 1 or 2 swing levels. So that was the one I was looking at right there. I have this drawn to the 61.8 to 70.6, where it really needs to be right there. There we go. So price came up, hit the 78.6, would have got me in there. Did not get me in the 88.6, no big deal. But then, as you can see, price took off straight down. There's the money box right there. Came down and it hit the target perfectly for it right there. So basically that's what it's doing, is 2-step trade setup, looking for the 4th point in the expanding triangle, because we're anticipating it coming down and creating the 5th point. So that's what it did. 1st point, 2nd point, 3rd point, going up to the 4th, then come down, make it 5th, continue to go up, go up, go up. There's the top of the 4th point, and then it finally came down, broke the 0% Fibonacci retracement line right there, which would be a complete 5th point setup for the expanding triangle. But we're looking for the target down here. Came down here and hit it and completed that setup for it right there. Then on top of that, we'll scroll back a little bit. Well, let me go over this next trade over here real quick. It's another expanding triangle trade right here, and for what we're looking for. So we had a couple of them. So you have the 1st point, 2nd point, 3rd point, and there's the 4th point. So then just depending on how high you want to go back up, at minimum would have been probably about right over there for it. Came down, let me adjust that. I think I had it initially, yeah, about right there. Let me adjust that. So it didn't come and hit a 78.6 to get me in, no big deal, but as you can see, it came back down for the 5th point and hit that target box right there perfectly. Completed that trade setup, and then you had another one right here. So you had a little bit of a longer term one right here using, I don't think did I use that one or not? Let's see here. Yeah, so looking at this right here, and then let me also put on the previous day's highs and lows, because this is something you need to be aware about as well, because this is the previous day's highs and lows are providing a lot of support or resistance for it. And how they have it set up right here is just these black lines right here. So that would have been the previous day low right there, and they just did the previous day low right here. So price came back up, hit the 78.6 to 88.6, came back down, hit the money box right down there to complete that setup for it. So, and that's the 1, 2, scroll this out a little bit. So you have 1, 2, 3, and it's going up, keep going up, makes a 4th point up here, and then scrolls down and makes a 5th point. So obviously the, let's see, 1, 2, there you go, right there. Let me change that up. So obviously this trade setup does not work all the time. So the key for it is figuring out which way the trend is going, because that is how you want to take this trade setup. Obviously looking at this, just looking at the 1 minute chart, and you can see right here the trade set, it's going down. So all you're going to be looking for is taking shorts. Obviously it doesn't work 100% of the time. There's sometimes they'll just blow right up through your exit, depending on, or your entry, and hit your stop loss for what you're looking for. But your risk to reward ratio, if you do take it full to completion, is at least 4 to 1. So really all you need this to trade setup to work is 30% of the time, and you're going to come out in profit. Of course, you can get out sooner, make it through on profit, and you'll still be doing extremely well for it. But that's why I look for deeper retracements, because it gives you a bigger profit margin for it from your risk reward ratio. For what you're looking for. So you have 2 things lined up for you: the expanding triangle, where coming off the 4th point, you're looking for the 5th point to happen, plus you're hitting between the 78.6 and 88.6 Fibonacci retracement level. So then moving on down here, starting on, this is I believe Friday over here. Yeah, here you have about the market open right here, right about Friday. And as you can see, market just started bouncing off all of the exit level, where it hit the money box right there, where it completed that setup. Plus you're getting the 1 hour chart down over here as well. Both of there's 1 hour trade setups. And as you can see for Friday's action, this was the huge support level. And then late Friday, around 2 o'clock, it finally had enough of it, and then just everyone got out of their positions, took their profits, and then went home for the weekends, finished up just before 3 o'clock for it. And so that is what's happening for the S&P 500. Probably going to cut the video off to talk about the S&P 500 here, since that's pretty much most people trade anyways. But yeah, so that's what we're looking forward for next week on the 1 hour chart. We'll just go back over here a little bit. We'll see if there's any trade subs. 1, 2, 3. So here you have another 4th one set up right here. Let's see, 1, 2. Let's see here. So a little bit longer. Again, this is just a 1 minute chart right here. So you're looking at 1st point, 2nd point. In fact, I need to go and fix that. There we go. There's 2 and 4. 1, 2, 3, 4. So this could be the high. It may not. Who knows? But what we are looking for is this coming down and creating a 5th point down here, somewhere breaking that previous swing low right there at 28.98, just for this setup. So if you're looking for it, how I'd be looking for it, I'd be at least be looking for that setup right there. There you have that. Let's draw the resistant box for it. Change this to the red. There you go. See, it hit the 88.6 level perfectly. Use it as resistance. So then the exit level, I'd be looking for this setup right here. I need to go change that to blue. And then this to more of a grayer right there. There we go. Let me change that to gray. So signify this isn't the 1 hour, which would be a really high resistance level for it. So that's how I'd be looking out for this setup right here. It is a valid one. If price does come up and hit the 78.6 again without going too much lower, I'll probably be looking at get in at one of these levels right here and looking to take it down somewhere around there, just because the short side of the trend is still definitely holding strong for it. Doesn't mean price may just continue to rise up. Yeah, that's definitely a possibility. And in fact, what I may actually do is take it up a tad, probably about right there. Excuse me. I'm gonna take it. Yeah, that's what I'm gonna do. I'm gonna take it up right there, and here's the reason why. Because the previous day's high. That's where that black line represents right there. Now when the market opens here on Sunday here in about an hour and a half, this will be the previous day high right here, but it gives you a little bit extra wiggle room for the resistance level for it to go down for it. So we'll go back over here real quick just to recap. So it's over on this one again, the regular contract. Let's do that. So that's what we're looking at for the 1 hour chart now. As you can see, if this setup there's two things going to happen. It's either going to continue for the 1 hour chart, hit that, continue to go down, hit this low down here around 2870. But for the 1 hour chart, as we have it marked up, we are in the middle of a big support area right there. Plus we had the finishing of that short setup. So there is definitely some support down here. So for it to go down here, it definitely has to take out all this big support that does down here on the 1 hour chart. And in larger time frame charts, the support and resistance areas does provide a lot more greater impetus than the 1 minute or 5 minute time frame. So if this does provide the support for the week, then we are looking at around 3210-ish area right here to be the exit level for that setup. If it doesn't and price continues to just go back down and eat up at the support down there, then we'd be looking for that to break, and for the short-term exit, looking at least 2872 for the 1 minute chart. So that's what we're looking at for the S&P 500 this week. Depending on what news that comes out, there's no reason to believe that the downside isn't yet over. So just trying to trade with the trend, and that looks right now is continue to move it to the downside. If this starts making higher highs, then we'll switch our bias and start looking for the upside. So that's that. This is Evan from evancarthy.com. Have a great week. Thanks.